Roth IRA. It's the only account where you don't have to pay taxes when you take the money out, which is a cool trading strategy for normal investments, but it's an amazing trading strategy for like day trading or highly speculative trading. So we're going to compare Roths, traditional IRAs, 401ks, the contributions of 6,000 this year for most people, and there's still time because the tax deadlines are extended to May 17th, and that includes deadlines for opening a Roth account, even if you've already paid your taxes, because there's no taxes to do opening a Roth. Let's cover this. This is a really cool way to not pay cap gains the whole time you're trading and not pay taxes at the end either. Yeah, so like, share, comment, subscribe, turn on notifications. My Roth IRA that I just opened this week, I did it before I did my taxes, but you don't have to because there's no taxes to do when you open a Roth because you just pay taxes on all your normal income as normal. There's no tax deductions or something for opening a Roth. And that's the only downside of a Roth is you don't get a tax deduction for opening it. But you can only, for most people, you can only put 6,000 in for 2021 tax year. If you're over, I think it's 50 years if you're over $1 million, there's different rules. So definitely check the rules for your situation. That's not financial or legal advice or anything like that. I'm just going over the basics of a Roth versus a traditional IRA, and then also the other retirement accounts and how they affect each other, which is basically this simple. Like a Roth and a normal IRA, both accounts you do not have to pay or file any kind of capital gains taxes. So all of your trading is just, there's no tax documents and there's no tax to pay, which is awesome for both of those reasons in both types of accounts. But the big difference is a Roth, you pay tax on the money before you put it in, and then on a traditional IRA, you get a tax deduction putting it in, which is cool, but you have to pay tax on all the money when you're taking it out, which it's a kind of a math equation, I guess, to see what's the better deal. But the basics is if you have super high income when you're in your 60s, like you're going to get taxed huge on the money you're taking out with a traditional IRA. And even if you don't, it's not really going to change the amount of money that you make because you can only put $6,000 in for most people, regardless of which account you do. So even though you have to pay tax on your normal income, you can only put 6,000 in. So the amount of money you're going to make in either account is going to be based on the 6,000 you can put in. But with a Roth, you don't have to pay cap gains the whole time. And then when you take it out, you don't have to pay income tax to take it out. So for most investment accounts, that's going to be way better. And especially if it's like a high risk account. And if you can take an account, say, whatever, this is 6,000. Say you take it to 600,000 or something in the next 10 years or 20 years, you don't have to pay tax on any of that when you're taking it back out. So it's a huge advantage. So that's why I opened a Roth this year. I also have a traditional IRA in here because I rolled a 401k over, and so that's all good too. That was the option for rolling a 401k. You have to go into a traditional IRA, but yeah. Anyway, that's the idea for me. And as you can see here, I'm just doing like angry speculation moves inside of this Roth. This is my my new retirement account. I just like basically day traded with it and got GME call options. Very diversified, very low risk, strategy that I'm doing in my retirement account here. I'm just like aggressively speculating and trading in this account, which is fine because you could. Well, I mean, if you just look at like Wall Street bets and like DFE, like he took $40,000 to like $24 million in like 1 year. So I don't know what type of account he did that in, but it was an E-Trade account that he had all those call options in because the screen looks just like this. And if he did that inside of a Roth and makes whatever, some millions of dollars, he won't have to pay any taxes later when he's taking that back out. So anyway, that's the huge advantage of a Roth. I think it's the best way to protect your investment from capital gains every year, and then you don't have to pay income later when you actually use the money. And it's also great, like if you day trade or swing trade, like you're gonna have this mess of trades and gains and losses, and that's all a nightmare on your taxes. So if you do that inside a retirement account, nobody cares. Like you don't have to file or report any of it, and you don't have to pay taxes on it in either kind of retirement account. So that's what I like to do, is trade all of the speculative trading. I like to do it inside of retirement accounts because it's all protected from taxes and you don't have to file anything. That's the general idea. All right, so let me go to the next screen, which is this is Investopedia. Just cover the key takeaways, basically. So for putting money into a Roth or a normal IRA, it's earned income, so you can't take capital gains income and put it into an IRA. It has to be earned income, which means like working hours, just making normal income from working, is what you can put in. And if you make over a certain amount, the rules change, which doesn't apply to probably most people watching this video. And for 2020 and 2021, it's 6,000 that you can put into this account. Unless you're over 50, it's 7,000. So for most people, 2020 and 2021, it's going to be 6,000, and that is until May 17 this year. People still have time to open this type of account. And then the key thing with a Roth is that you can take out your contributions tax-free. It doesn't matter when you take it out. It's going to be tax-free, but if you take it out early, you're going to get hit with a penalty. So if you withdraw earnings from a Roth, it may trigger taxes and penalties depending on the age. So I don't know why it says it triggers taxes. That there should be tax-free. It's always tax-free. I don't know why it says taxes, but you get penalties if you withdraw early. That's wrong. But and this is not legal or tax or investment advice. I'm just giving you a heads up on the general idea of how all this works, and go look up your specific tax situation, talk to your lawyer, all that stuff. And then 2020, the CARES Act lets you withdraw money without a penalty. For this tax year, I think, if you want to withdraw money from retirement accounts, you can do that without a penalty. And then let me search for, I think it says the tax deadline in here somewhere. May here. Yeah, this thing. Okay, so the 1040 blah blah blah, May 17th, right? So the IRS is postponing tax filing to May 17th this year for 2020, and also you can open a Roth. You can open IRAs, Roth IRAs, HSAs, an Archer MSA, a Coverdell ESA, I don't even know what that is, but all of those different types of accounts have been extended until May 17. And this is, I'm on E-Trade on this account, and I know that's true because I clicked on open a Roth and it said 2020 and 2021, like what do you want to contribute to this plan right now? And then I just said, and it didn't say like your max is this amount or that amount. I just said what do you want? So I put 6,000 in for 2020 before I did my taxes. And then when I did my taxes, there's no tax forms related. Like you just pay tax on your normal income. You put 6,000 in this account. There's no taxes to do opening it. I'm pretty sure that you can do your taxes first, and you can still open a Roth until May 17 for anyone that's trying to do that. Double check that if you're trying to do it after your taxes. But there's no tax forms to file, so it shouldn't matter at all. And this, I don't know what this is. February 22nd, 2021, the IRS announced victims of the 2020 winter storms in Texas will have until June 15th to file stuff. Okay, so if you're Winter Storm Texas, there's new rules. Check that out, I guess. Okay, so let's go over to the market and take a look at what's happening. All right, so we bulled back into the bull channel here on the S&P. I'm going to take a look at the S&P. I just did a whole thing on Bitcoin. Whatever, I'll check on that too. And I have GME inside of this Roth, so I'll check on the meme stocks here. Okay, so basically we we did all these weird checkdowns here over the last few months because the dollar was going really strong. The market got kind of worried about it. Then we had a weak dollar for, the past few weeks, and we went super bullish. Here, we did some pretty weird consolidations inside the bottom of the bull channel, and now it looks like we're trying to pop out and get more bullish. So the S&P looks like it wants to pop out and go bullish. The generic bull move would just be up the channel for another whatever month, a month or 2 months, 1 or 2 months, until we get into the top of the big bull channel. So this little bull channel is pretty cool, but the top of the big channel is not cool. Like, we have never attempted to break out of the top of this thing. It's major resistance. It's like 43 to 44 range. And then there's a smaller percentage chance that we bust out of the top of the little bull channel, and we could run into big time resistance earlier here. I think the most likely thing the market's trying to do right now is bull the channel until we get to, until the channel kind of runs into the bigger channel, is what it looks like the market wants to do to me right now. So I'm bullish S&P, but I don't like trade long the SPY, and we don't have a whole lot of room until we get in trouble here, so it's kind of a dangerous look. But we did just barely breach the highs here, pulled back. So this is a bullish look for the S&P. I haven't seen anything that indicates we're have any kind of margin lending trouble or banking trouble short term here. It's just a technical resistance level up here, if we can bull it up here, where it starts to get pretty sketchy. And then on the downside, we have the bottom of the little bull channel, which we absolutely busted and destroyed up like this. The bottom of the channel is really not providing any kind of dynamic support. It's just a trend area. But like, if this market wants to break down, this thing's not holding it. It's not holding it up. So just on the downside, like if we break down under whatever 41.5 kind of area here, if we get bearish down here, especially if we back test it, the downside moves, and this probably wouldn't happen unless there's some kind of big problem with banking and margin trading, which could happen because, I mean, we saw the Archegos hedge fund blow up and all the margin accounts went crazy. We saw Viacom crash. All that stuff happened pretty recently. We've had a few hedge funds get in trouble. I mean, obviously, Melvin Capital during the first GME squeeze got in big trouble. There was another hedge fund that blew up before that. So there's definitely a ton of hedge funds overexposed with huge margin trading in the billions of dollars that can get in trouble, and then the banks that are backing them can get in trouble. So there's definitely risk, but there's not really a data or indication of when that might happen or how big it might be. It's just like the general market risk. There's huge amounts of leverage and there's huge amount of margin loans, and there's hedge funds with who knows what kind of risky positions that could start a down move. So there's definitely risk in the market. It's been that way for a while. But just on the technicals, it's just if we break down, it starts getting bearish looking, especially if we come and back test it, it gets bearish looking. But if we do back test and get bearish, there's very little support between the bottom of the little bull channel and the bottom of the big bull channel. And then the bottom of the big channel also is not really super strong support. The only line that we have that's not been busted up is, well, both of the resistance lines here have not been busted up. We did a tiny little breakout attempt on the top of the little bull channel. So both of these top channel lines are pretty strong resistance. And then for support, both of these yellow lines have been busted up. I'll go back a little farther, but the only line we have that hasn't been busted up, it never coiled underneath. All of the moves through this purple line, this bear line here, have been stabs that failed. So this purple line is really strong support, and both of these blue resistance lines are strong. But it's a long way between this resistance line and this freaking bear line down here. I mean, that's 42 down to like probably 32 or something by the time we made it down there. 33. Alright, so that's the look, is like there's limited amount of upside and high risk here, so this is a really dangerous spot to be looking at opening new long positions. And it's also a really dangerous spot to try to short anything because there's no indication of it turning over anytime soon. It's bulling right now. So it's just like a really weird kind of market position and a general bullish trend here, but just high risk, and the upside keeps getting smaller as we go. So that's just the general S&P. I looked at Bitcoin. I want to see what it's doing. We did a second big bear flag breakdown in a row here on Bitcoin, and it is bouncing. Cool. So this is exactly what I want to see on Bitcoin. It is bouncing, and I want to see this get here and back test this this bear flag. Boom, and then another down move is what Bitcoin looks like it's doing on the technicals. And I was just making a video on Ledger X, and when it gets here, it looks like another couple hours maybe it'll get up here. I'm going to go get put options on Bitcoin for the next down move. And yeah, let's take a look at the meme stocks. So GameStop. Oh, I missed it. Where did it go? Right. Here we go. Alright, so this is not trading now. This is the same spot that we were at on the... Oh, wait, it is trading. No? No, it's not trading. Okay. Yeah, anyway, GameStop, we want what? I think I drew these lines on 30 minutes. Yeah, this is the same thing that we had on Friday. Okay, so GameStop, let me go out. This first bubble, this is the January bubble, and we have a big neckline at 194, which we've got a ton of reactions on, and I think this is the actual bearish kind of resistance line that we can't quite get through. We did a false breakout once and really failed. Like it dove, and we've been under this thing, but we have support coming in here, and we're right at the end of this thing. So I think Monday only. Like if we don't bust out of this thing to the upside on Monday, then it's just going to be this longer term support on GME. But it looks like this thing wants to freaking break out here. Like I was thinking this move was a breakout, but it's too small. And then of course we consolidated down, so it's obviously not a breakout. But we are coming into the very tip of this consolidation area right now, coming into Monday on GME. So this should be a really interesting week for GME to see if we get a breakout move or see if we like consolidate down to the normal support area. If it's normal support, it's still only another week until this huge hole area consolidates. But you know, this thing has not crossed back over to the support line any time during this. So this looks like its own consolidation that doesn't care about this longer term support. Yeah, so this looks like a super bullish flag with a false breakout already built in. This looks really bullish technically to me on GME. And then AMC does similar things. I've been playing with the AMC chart a little bit, and this looked like a breakout move, but it consolidated on this downhill angle here. So I moved the lines around where, boom, like it looks like we're running into a resistance line here. I made this wedge way bigger. This isn't anywhere near the end of this wedge, so and this thing's like a symmetrical triangle on AMC, so this a symmetrical triangle like this is just like a 50-50 coin flip as to which way it wants to break. But if we break out of the top, that's going to look really bullish. If we consolidate, it's just more crap for like another month. Yeah, anyway, that's AMC chart. Looks way different than GME, which will be interesting because usually they're going to break at the same time. It's just like the short squeeze kind of charts. I think, what other costs? Cost does similar things. Yeah, and this looks more like the GME chart with a big time consolidation and maybe trying to break out. So, yeah, next week should be really interesting on the meme stocks. And that's the general outlook. Yeah, so for me, I like the Roth IRA a whole lot for speculative trading accounts because There's no cap gains to begin with, and if you just really kill it and really take your account up, if you go to $1 million, over $1 million, from the little bit you can put in there, you don't have to pay tax on it when you take it out, which is excellent. If you're doing super safe trading stuff, maybe a traditional IRA would make more sense. Roth is still good in that case. And if you want to trade Bitcoin call options, go back to my previous video. Look at Ledger X is a pretty cool spot to trade Bitcoin calls, but you cannot do that inside of a retirement account. For crypto, I think really the only thing you can do inside of an account like an IRA, Roth IRA, is you can hold the Grayscale Bitcoin Trust or short it, which is not leveraged obviously, but it's still kind of a cool Bitcoin option, not option like option trading, like just something you can trade as far as Bitcoin goes inside of a retirement account. I've done that before. I've traded the Grayscale Trust inside my retirement account before, and it tracks Bitcoin pretty well. Yeah, anyway, that's the look at retirement accounts, kind of strategies, the tax deadlines, and there's still time to open a Roth for this year, even if you have a 401k for most people, but go, check the laws and your tax situation and check with your lawyer, all that stuff. But yeah, that's a cool look at what's going on now. We're getting some really cool moves in the meme stocks, in Bitcoin, and in the stock market. Like this should be a pretty cool trading week, and even more cool with a Roth IRA. So happy trading.